Welcome back to Rekt Radio, the only show that looks at a wild, volatile crypto market and says, isn't it beautiful? I'm Sunny, and folks, the energy today is palpable. There's a buzz in the air, a feeling that we're on the edge of something incredible.
And I'm Cole. I'm here to tell you that the buzz you're feeling is probably a hornet's nest you're about to step on. That incredible feeling is usually what comes right before the ground gives way. Let's try to get through the news before we all fall into the abyss.
Never an abyss, Cole, only buying opportunities. And speaking of opportunities, we have to start with the king itself, Bitcoin. The conversation, the chatter, the sheer level of engagement is through the roof. Sentiment data shows Bitcoin's social dominance is spiking. Everyone is talking about it. The world is waking up.
Oh, wonderful. The mob is gathering in the town square and you think it's a parade. Sonny, a spike in social dominance isn't a bullish signal. It's a deafening alarm bell. Historically, when the chatter gets this loud, when every taxi driver and your dentist is talking about Bitcoin again, it signals a local top. It's the market's way of yelling, "Get out." The smart money is selling into this hype, and the retail investors, drawn in by the noise, are about to be left holding the bag.
I see it completely differently. I see a groundswell of interest that builds a new, higher foundation of support. This isn't just noise, it's a narrative catching fire. It shows a growing, vibrant community, and that's the ultimate source of network value. But if the king is too mainstream for you, let's talk about the old guard, the classic coins that are roaring back to life. This isn't a narrow rally, it's the entire kingdom waking up.
You call them the old guard, I call them the retirement home. This is the surest sign of late-stage mania. The market has run out of good ideas, so now it's digging up fossils and pretending they're dinosaurs. What dusty relic are you excited about today?
How about Stellar? It's up 30%, and not on some vague promise, but on concrete, game-changing news. They've partnered with PayPal. Let me say that again. PayPal, a global payment giant, is integrating with Stellar. On top of that, the network is about to get a massive upgrade with Protocol 23, making it faster and more efficient. This is real-world adoption on a scale we've only dreamed of.
A partnership? I'm sure it's a very exciting, very small-scale pilot program that'll be quietly shelved in 6 months. PayPal is a giant, and giants don't partner, they experiment. And a 30% pump? That just shows how thin the liquidity is on these old chains. A single headline can cause a massive move because there are so few people actually trading it. It's a beautifully crafted exit pump for insiders.
It's a vote of confidence from a titan of industry, and it's not an isolated event. Look at Tron. It's surging on the news that there's going to be a Nasdaq-listed product tied to it. This brings Tron to the most famous stock exchange in the world. It's about legitimacy, accessibility, and putting crypto in front of a whole new class of traditional investors.
A Nasdaq-listed product. Let's be clear. It's probably some convoluted exchange-traded note that gives you synthetic exposure, while a bank on the other side collects fat fees. It's not investors buying Tron, it's investors buying a derivative wrapped in a promise inside an enigma. It's financial engineering to capitalize on hype. The house always wins, Sonny. They're not legitimizing Tron, they're creating a new product to sell to suckers.
It's a bridge, Cole, a bridge between the old world and the new. And if that's not enough for you, look at Litecoin. It's up nearly 100% in a month. The market is buzzing with optimism about a potential Litecoin ETF. Plus, the halving is right around the corner, which will cut the new supply in half. It's following the exact bullish playbook that Bitcoin did.
Exactly. It's a bad cover band playing Bitcoin's greatest hits from a year ago. ETF optimism is not an ETF approval, and the halving narrative is the oldest story in the book. It's always priced in. This isn't a sign of health, it's a sign of a market that's completely out of ideas, blindly rotating capital into anything with a familiar name and a half-baked story. This is the froth, the foam, the absolute peak of the frenzy before it all washes away.
You see froth, I see a deep, powerful, and broad-based re-rating of value across the entire crypto ecosystem. But fine, if the battle-tested legends don't impress you, let's talk about the cutting edge. Let's talk about the platforms that are building the future as we speak. The innovation right now is simply off the charts.
Ah, yes, the innovation. Is that what we're calling the endless cycle of new buzzwords and complex systems that promise to solve everything but usually just end up breaking in new and exciting ways? Please, dazzle me.
I'd be happy to. Let's start with Near Protocol. It's up 12%, and for a very simple reason. It's diving headfirst into artificial intelligence. It's integrating AI capabilities right into the core of the network. This isn't just a trend, it's the convergence of the two most important technologies of our time. It's creating a smarter, more dynamic, and more powerful blockchain.
AI integration, of course. That's the 2025 version of sticking .com on your company name in 1999. It's a marketing gimmick. It's a meaningless phrase designed to attract hype from people who don't understand either technology. They might as well announce a quantum synergy partnership. It's pure, unadulterated buzzword chasing to pump the price.
It's strategic vision. But if that's too forward-looking for you, look at Cosmos. They just made a huge, courageous decision. They are officially abandoning the EVM to focus entirely on their core mission of interoperability. Instead of trying to be another Ethereum clone, they are doubling down on what makes them unique, being the Internet of blockchains. That's conviction. That shows a clear focus that the market is rewarding.
Let me translate that for you. Abandoning the EVM means they tried to compete for Ethereum's developers and failed miserably. This isn't a courageous strategic pivot, it's a retreat. They're waving the white flag in the Layer 1 wars and falling back to their little corner of the market. It's not a sign of strength, it's an admission of defeat.
It's called focus, Cole. It's about being the best in the world at one thing instead of mediocre at many. But while some chains are focusing, others are expanding. Look at Arbitrum. They are partnering with Gemini to drive mainstream adoption. They're making it easier than ever for regular users to get onto their network. That's how you grow.
Oh, that's a brilliant strategy. Announce a big, shiny partnership to lure in fresh retail investors right before a massive token unlock is scheduled to hit. Do you read the fine print? While Gemini is building an on-ramp for the public, the insiders and early investors are getting ready to open the floodgates and dump millions of dollars worth of ARB tokens onto the market. It's the perfect storm. They create the new liquidity and then provide the supply to dump into it. It's utterly predatory.
You're impossible. You see conspiracy in everything. What you call a storm, I call a vibrant, dynamic market where all these different strategies are playing out. But I know. At the end of the day, all roads lead back to one place.
You're finally getting it. None of this matters. The AI buzzwords, the PayPal partnerships, the insider unlocks, if the king isn't healthy. Everything else is just a distraction. So let's cut to the chase. Pull up the technicals for Bitcoin on TradingView. Let's see what the charts are really telling us beyond all the stories and the hype.
With absolute pleasure, because the data, Cole, the cold hard numbers paint a very clear picture. I'm looking at the daily chart for Bitcoin right now. The overall summary, combining dozens of indicators, a solid buy. The market is digesting all this news and activity and is telling us it's ready to move higher.
Okay, let's look under the hood. I assume my old friend, the moving averages, which tell us about the past, are flashing strong buy or something equally euphoric?
They are indeed. A strong buy on the moving averages, confirming that the underlying powerful trend is firmly in our favor. This is the deep current of the ocean, Cole, and it's pulling us up.
The current of the past. It's the wake of the boat. What about the dashboard right now? What are the oscillators saying? The indicators that measure the real-time momentum? Are buyers still sprinting or have they slowed to a crawl?
They are at a perfect neutral. And this is the most bullish signal on the entire page. It shows that after all this strength and all this positive news, the market isn't overbought. It's not stretched. It's not exhausted. It has absorbed everything and is calmly consolidating, building up energy for the next massive launch. It's a picture of pure sustainable strength.
You call it sustainable strength, I call it a catastrophic divergence. This is the reddest flag you could possibly find. You have the lagging indicators, the moving averages, telling you the party was great. But you have the real-time momentum indicators, the oscillators, telling you the music has stopped and everyone is gone home. The trend is strong buy, but the current momentum is neutral. The engine was screaming and now it's gone quiet. The buyers are exhausted. This is not consolidation. This is the eerie calm before a collapse.
It's the definition of a healthy pause in a roaring bull market. It's the market taking a breath, establishing a new floor, and preparing for the next ascent. This is the chart that institutional buyers dream of seeing before they enter.
It's the chart that liquidates optimism.